The NSE 20 ending the day yesterday on a new 2010 high at 4,319 points. Of course, that is at a 21-month high for the NSE 20. A lot of good news coming through for the local markets, and it seems that we're still seeing liquidity and we're still seeing investors, and especially foreign investors, playing a big role in the movements that we've been seeing.
Yes, definitely. You realize in the past few weeks there's been a lot of local liquidity entering this market, and foreign buy-side interest in this market is still very active. So in the next couple of weeks, we still expect upside on most other stocks, especially those ones which have been left behind in their price rallies.
Looking at some of the big movers in yesterday's session, we're still seeing a lot of activity coming through for equity and, of course, Safaricom. And they have been, of course, top of focus over the last couple of trading days, purely because of the M-KESHO strategy that they've implemented. Apart from that, equity signing that very important deal with the Chinese Development Bank. But Safaricom is set to come out with results tomorrow, and I think highly anticipated, and many investors are expecting good numbers.
Yes, true. Equity Bank, you realize in the past 3 trading sessions, market activity has really been strong. The price has really edged up a lot in the past 3 days, and this is mainly because of the launch of the M-KESHO product. Now, this is a revolutionary product developed around the M-Pesa system, and for now it's exhibiting a lot of market interest as investors try to make sense of what it means for Equity Bank and Safaricom in terms of earnings upside. But definitely is a product that's going to revolutionize the way mobile banking operates in this country. And of course, Equity Bank and Safaricom have first mover advantage in targeting mass market transactions and mobilizing deposits at the mass market level. So Equity Bank will be expected to mobilize a lot of money from deposits in the mass market.
Ogilvy and Scangroup also under the spotlight. We know that many advertising companies have come to the fore and spoken against the fact that Ogilvy East Africa is looking for a bigger stake in the likes of Scangroup. A lot of concerns about monopoly also coming to the fore because of a potential deal between the two companies. How do you see this playing out?
For now, what they can do is petition the Monopolies and Price Commission to look at the deal more closely, especially in the interest of maintaining competitive dynamics in the advertising business. You realize that Scangroup has a market share of 61%, which is they take the lion's share of the advertising revenues in this market. So for now, unless they can be able to prove something that is really detrimental to the competition in landscape in Kenya, it might be hard to challenge the deal. And Ogilvy has always been a competitor, and according to Scangroup, they intend to maintain a holding, need to hold it as part of their subsidiaries, and Scangroup maintains the holding company. So it might be hard to challenge it on these grounds.
Gregory, just lastly, looking at KenilKobil, a company that went ex-div in yesterday's session, also having expansion problems and getting a lot of resistance from the Zimbabwean government. Give us your view on KenilKobil, because it seems fundamental factors driving it for even higher levels than what we've been seeing.
Well, you realize that a company like KenilKobil, which has significant interest in Pan-African downstream oil markets, will occasionally encounter challenges of regulatory nature in some of those jurisdictions in which it operates. And Zimbabwe is no exception. You realize that the deal was blocked by the indigenization committee, and we've heard that they're trying to talk to them and to salvage the deal, but we just have to wait and see how it plays out. But in other countries, it's managed to expand really well. Right now, subsidiaries account for 37% of operating profitability. So in the medium term, investors expect KenilKobil to do well in terms of profitability and rise in revenues.